Good morning, all. I hope you are well and I hope you had a great weekend. And welcome to this morning's video. So, I have four pairs on watch this morning. Those are Kiwi CAD, Pound Swiss, Dollar Singapore, not one I usually have on watch, but for good reason, and Pound Dollar. Okay, so Dollar Singapore is my little hedge play. We may get some alerts going off in a few minutes' time. It is currently 6 minutes to 7 in the morning. UK time, and the European elections took place last night, so there may be a little bit of there was certainly some erratic price action when the market opened last night, most likely due to those elections, and there may be a little bit in a few minutes time, but we shall see. So Kiwi CAD is my favorite of the bunch. You can see on the higher time frames we had this failed structure here. Okay, so we have this is important to note because the patterns that we look for are not patterns that play out all of the time. If they were, as I often say, I'm sure Warren Buffett would be interested in learning how we trade. If there was a trading strategy which didn't produce any losses or just worked in quotation marks all of the time. But it's important to draw attention to the fact that some structures, such as this one which has 3 drives in it, doesn't commit to the upside. It just drops out. Okay, so nothing happens all of the time and nothing happens none of the time. And in trading, you have to think that way and think probabilistically so that you don't blindside yourself with confirmation bias by thinking something has to happen or not happen all of the time. Okay, so we have the failed continuation structure. We then have, so we drop out of this flag and then price comes up and leaves this footprint here. Okay, initially we had a bit of a footprint there, but then we just completely blasted through that, created a new one. Then we gravitated up to this area and near missed to it. And as I often say, these near misses often give us an indication of how valuable a particular area of value is, okay? Especially when we then sell off in a corrective manner, okay? So we sell off more correctively than we moved up. We also have an element of this structure to it, okay? We have the element of that impulse correction continuation, which is what we got. Okay, we then tap into that area of value, which was also sharp. The sharpness often also dictates how valuable the area potentially is for a sell or a buy. Okay, and then what normally happens is that we break above, catch people the wrong side of the market who believe that this is going to the moon and that support, that resistance becomes support once it's broken above. We break above and then we plummet to the downside. And what I like about this is that we are now trading back below both of these highs now, suggesting that we may be a move to the downside may be imminent, okay? Potentially to come all the way down to here because we have a little bit of a near miss to that area here, and potentially longer term we come back down to here, take out this near miss, and also there's a near miss there just to touch on it and to fulfill the structure here. But I wouldn't expect to hold a position like that for the duration. But what we can certainly do is potentially capitalize on some of that run, which is why I've got my arrow, partly why I've got my arrow pointed here. Okay, so if we just drill down, you can see on the weekly chart we have that evening star formation there, confirmed evening star formation, confirmed by Friday's daily close. On the weekly chart, you can see that we have a bullish candle with a wick above it. But importantly and crucially, we have wicked through and not to the area. So even though this candle is bullish, there's no need at this moment in time for price to come back up and fill that because it's already washed out all of the orders that were above these highs, okay? So we drill down to the 4 hour. You can see price starting to consolidate, suggesting that this is an impulse correction continuation to push lower. The proportions of this relative to the impulse down which has preceded it look a little bit small to me at this moment in time, so I wouldn't be surprised and if we consolidate for a bit longer. And this price action here has certainly given me that impression as well. So what I'll be looking for from this pair is something like I have described here. So I'll be looking for a 3-touch 1 hour continuation after a big drop such as this, what happens is when a big move starts to happen like this, a lot of the people start selling because they fear it's going without them, and many of these people are people without a plan. And so therefore what happens is they just place their stop losses all the way down like that. Okay, so what can happen here is when you get a big move down like this, followed by a correction like this, often price will slip up like that and pull down. Okay, it will slip out of the structure, pull back up, tap some of those stop losses and pull down. So what I'll be waiting for in this instance, partly because of the size of the impulse and just the proportions of this as well, I'll be waiting for a 3-touch 1 hour continuation or a 2-touch 1 hour continuation with the 3-touch structural approach, which would be something like that. Okay, the 3-touch structural approach, and then that would be very deliberate. Either one of these would be very deliberate and would mitigate the risk of what I've just said. Price slipping back up and then dropping like that. Okay, especially after a big drop such as that. Okay, and then I'll be able to manage it. And if we just measured this would be so if we measured, like I'm measuring from what I've drawn, okay, and we assume that the continuation leg out would be of a similar length. We measure it from the break as well, because the volume that's been generated can dictate the move, how far we go. Okay, that would take us down to the base of this structure, which actually ties in contextually because that's where the start of all of this volume originated from. Okay, this is the origin of the move. Okay, so that makes contextual sense. And what I would do is I would use the mechanical management tool, measure from range to range, and then I would set a take profit at the 90% area, and I would simultaneously trail my stop loss. So that is Kiwi CAD, looking very nice. Let's move on to the other pair. What time is it now? It is bang on 7 a.m. So we'll see if some alerts go off. Pound Swiss, similar story. We have on the higher time frames, we have all of this volume that was built here. Okay, the origin of the move is there. Okay, what happens? We come up to this area, we get a little ending structure here. Okay, we get the first drive, second drive, third drive. Okay, we break out of that, which likely confuses people. They think it's going to the moon. Many of them would have been too zoomed in, not realizing that they're trading into a high, into the origin of the move, because many people are too zoomed in and they're camped out on the lower time frames. We then break above. Many people think that this now becomes support because we've broken above. They start buying. Okay. Many people may have seen this as a retest, although perhaps not, because it didn't actually come down to this area. But people have clearly started buying here, and then bosh, they get completely washed out. And you can see now that we're well and truly trading back below here and below all of these highs, suggesting once again that we may be able to capitalize on a move to the downside. Okay, I wouldn't necessarily envisage a move all the way down to here. I wouldn't necessarily call that a near miss, but we could certainly capitalize on a move perhaps down to here, and if we broke below that, perhaps down to these areas, which just so happen to be the kind of retest of all of this. Okay, so as we drill down, you can see, so weekly, very solid weekly close, bit of a wick below it. Okay, bear in mind this is pound Swiss, and pound Swiss I'm talking about. Okay, so people reacting to last night's EU elections, most likely. So, but we have a solid candle close there with a bit of a wick below it. Okay, there's your consolidation. So just looking for that impulse correction continuation. If we measured that leg where we are at the minute, and we assume the continuation leg out would be of a similar length, that would take us down to that low. Okay, what I was talking about a minute ago, which just so happens to be the retest of the back end of this and the back end of that, and to some extent the back end of this. So that's an area of significance. So that makes contextual sense. You can see the structure forming here. If we just zoom in a little bit. Okay, so previously I was looking for, and I am still looking for it. What happens? We come up to this area, we wick to it. Usually when we wick to an area, we come back up to and wick through it, okay, before moving to the downside. And that makes contextual sense as well, because what we may be doing, we may be coming back up to retest the back end of this kind of running channel. So it wouldn't surprise me if we needed to break just above before the move to the downside continues. And just looking at how we've responded from this area. So this is what I forecasted. Okay, this was my forecast. But just looking at how we've responded to this area, we've kind of correctively moved away. And that's probably because we wicked to the area and not through it, and because we may be needing to come back up and retest the back end of that. So I'll still be looking for the same thing. I'll be looking for a tap into the area of value, a push down, and then a 5-minute continuation as a minimum, or a 15-minute continuation. Okay, but what it's looking like to me is it wouldn't surprise me if we get something like this. We come back up, and then we get more of that three-touch structure like that. Okay, especially since this has been a very big move. Okay, and there hasn't been a lot of volume generated along the way. Okay, so, and particularly on a pair like pound Swiss, price after such a big move, which hasn't really built much volume along the way, would probably need to build quite a bit. Okay, especially if we're going all the way down to that low that I was talking about. And then, but regardless, what I'll be looking for today, so that wouldn't necessarily be ready by the end of the day, which is why I've still only got this forecast on the chart. And if that shapes up what I'm looking for, then I would just literally just target that low there. Okay, and I would measure from range to range, and that the 90% area would be there, where we often pull back deeply, even if we are continuing in the forecasted direction. And then I would have something in the region of 7.5% to work with. Of course, if we broke below that low, which is partly why this pair is on watch, and we would potentially have trades, we might have a correction underneath that low and be able to get short into these lows. Okay, so possibilities with this trade, with this setup, with this pair, but that is pound Swiss. So let's move on to the next pair. So dollar Singapore is a bit of a hedge play. Okay, so I am anticipating the DXY, the dollar index, to go long at this moment in time, but just as a little potential hedge play. Okay, I don't know what's happened there. Let's just, okay, my alert has just been moved for some reason. What's going on here? Okay, let's try that again. Right, stick that there. Okay, a little hedge play on dollar Singapore. Okay, so we have this high here, and we have the near miss to it. Okay, we also have that near miss to that low. Okay, so this is a standout area of value. Okay, we can separate the structures. We've got this structure here. Okay, price breaks above, pushes to the downside. A lot of people will be paying attention to this high. So what I'll be anticipating, you can see we're at the area of value. If we break below this area of interest, this area of interest here, then it's highly likely, if we get a correction afterwards, which would be the market confirming that it wishes to push lower, that we're coming down to potentially take out this low, that this low near missed to. Okay, especially since if we just measure the range, okay, that low kind of almost lines up on the 90% area, so that makes contextual sense. And you might think, well, why would dollar Singapore do that? Well, one of the reasons it might do it is because if we just flip to the DXY, the dollar index, we have left a gap. Okay, we've left a gap to this low here now, which may be filled. And one of the reasons it might be filled is because there's a gap here. Okay, price tends to fill gaps. Okay, so if price was to come down to fill that gap, what it might do, okay, because we also have this kind of three-touch structure, we've expanded into that area. If it comes down to fill that gap and we got a correction afterwards, then the DXY, the dollar index, would likely go short to take out this low, which this low near missed too. Okay, and if that was to happen, although you can see from my forecast that's not what I'm anticipating at this moment in time, which is why this is a bit is a bit of a hedge play. If that was to happen, dollar Singapore would likely get moved to the downside to take out this low that this low near missed too. So with all of that in mind, what I'll be looking for is the following. I'll be looking for price to impulse down below the area of interest, and then I'll be looking for either a 5-minute continuation or a 15-minute continuation, and I'll look to get short on the break or within it. And then really, because price tends to mirror what it did to the left on the right, okay, we would likely follow through with the same level of aggression as we moved up here. So there wouldn't really be any inflection points until all the way down here. So you would have a trade which could bank you about 8%, and literally I would set a take profit there at that kind of 90% area, or that low which fell just above the 90% area of this range, and then I would trail my stop loss accordingly. So that is dollar Singapore. Okay, so let's move on to the last pair. We've got just enough time to get through this. Pound dollar. So pound dollar, one of the reasons this is last on the list is because this isn't quite as standout as some of the other areas of value. Look at Kiwi CAD, much more standout area of value. Okay, that's a much more standout area of value. Dollar Singapore, dollar Singapore standout. It sticks out like a sore thumb a bit more than pound dollar. Well, that's a bit more of an inflection point. But regardless, if the dollar does move to the upside, then pound dollar is moving to the downside. Okay, so you can see that we have the area of value there. We wick to it. What happens when we wick to an area? We usually come back up to fill it and break above, which happens here. We then get a little bit of a scoop double top and drop below all of this consolidation, giving me a clue that we'll likely take out this low, that all of these lows near miss to complete that structure. Okay, where there was actually where we would be retesting the back end of that. Okay, so that seems like a solid target to me. Okay, you can see on the daily, heavy bodied candle, big wick above it. These are more bearish than the solid bodied candles, which are which don't have a big wick above them. Okay, on the weekly chart, you can see a bit of a wick below that. Okay, so wouldn't surprise me if we consolidate sideways because of that weekly. But you can see that we even had, you can see the structure there, 1, 2, 3. I said to you in a previous video, I believe, that when we have a structure like this, okay, where the middle section is a bit of a straight line, not corrective as we would normally anticipate seeing, we normally get a 3-touch structural approach which has a corrective middle section in it, and that's exactly what happened. We then tap into that area and drop out below the low of this structure. So what I'm seeing here is a potential impulse correction continuation to push lower, because we're now consolidating below these lows. Price has left a little bit of a footprint. Okay, there's your footprint, sharp move up followed by a sharp move down, and we've kind of correctively moved to the downside. So with that in mind, what I'll be looking for is the following. I'll be looking for a 3-touch 1-hour continuation, as I said a moment ago on, I think it was Kiwi CAD. When we get a massive move down like that, okay, price will often pull back because of all the stop losses that will be dotted along the way by people that just jumped in because they saw the move going without them, in quotation marks. So that's one of the reasons I'll be looking for a 3-touch 1-hour continuation or a 2-touch 1-hour continuation with a 3-touch structural approach. And then I would look to get short within the flag, okay, and then I would be targeting these lows. And once again, I would I would use the mechanical management tool. I would set a take profit at the 90% area. I would trail my stop loss accordingly, what with the take profit set there, and then that would be very nice indeed. And of course, if we break below the low of this structure, then we potentially have trades all the way down to these lows and to the base of all of this consolidation. But we shall see. Okay, only one alert has gone off so far with regards to what happened last night in the European elections. But I hope you've enjoyed this video, folks. I hope it has provided you with some value. And I will see you again in the next one, which will likely be made tomorrow morning. Have a great rest of your day.